The markets right now seem to mostly be focused on the overriding macroeconomic narrative as opposed to what was happening in the New York courtroom. Has anything in your mind told you that it's anything but inflation at this point for the U.S. economy and by extension, maybe even for the U.S. voter?
So, hi, Don. No, I mean, I think that the fundamental story is still one of what is happening with growth, what is happening with inflation, when is the Fed going to move? Those are still the key stories, and that should continue to be the main story on investors' minds. Inevitably, the political news does add volatility. That's what we've been anticipating, and certainly the news overnight does inflict that additional amount of volatility that I think the market doesn't really want to see. But for investors, it should not ultimately change the stuff that they're really focused on, which is, as I said, growth, inflation, and what is the Fed doing.
That, by the way, growth picture right now seems to still be decently intact. It is still growing at a fairly healthy clip that doesn't imply recession. Prices are still stubbornly sticky, but we are at a stock market at record highs or just near them right now. What exactly can upset the balance here? And will today's PCE report be anything that generates any kind of real volatility?
Well, so the PCE report, we can generally make a fairly good bet on what that is going to hold because it's one of the last indicators, and you have a number of other ones which feed into it. So it's unlikely to create that much volatility. But going forward, the thing that could really disrupt markets at this point is, of course, if we start to see inflation trending higher again. Today's print should be lower from last month. But as you move forward to future months, if you do see that trending higher and then you're pushing out Fed cut expectations into 2025, certainly that would be disruptive. But actually, more than anything, it's the idea that if, the expectation is that maybe the US economy is downshifting, but it's not heading to recession, as you said. If, however, we were to see a major deterioration in economic data where the consumer really is struggling, the labor market is showing clear signs of cracking, well, then that would have an impact because you're going to have an impact on earnings growth. We're not expecting that, but certainly that would be the major disruptor.
Also, Seema, PIMCO's co-founder, Bill Gross, told CNBC just yesterday that the Fed is the most important factor for the markets going forward. I just wanted you to take a listen to what he had to say.
Now, I think only the central banks and only the Fed is important. So watch the Fed. Don't necessarily believe them because they haven't been actually very good in the past 5 or 6, 7 years. But watch the Fed and see where interest rates are headed. That will help in terms of the markets going forward.
Seema, before we let you go, we're getting pretty close to an election. How quickly does the Fed have to move, if at all, ahead of this to avoid any kind of seemingly weird perception about political interference?
I think for the Fed, what really is important is that they have to make the decision once they are absolutely convinced. So if they don't have sufficient evidence that inflation is decelerating to the level that they're hoping for, they cannot move. Otherwise, they will be accused. So I think for them, it's really being 100% sure that the direction that they're going to take is the right one, depending on the incoming data and their outlook. Anything other than that would, of course, lead to some kind of accusations.